Hi friends, my name is Bharath Chandra. Few days back, SEBI announced the final framework for a new asset class called Specialized Investment Fund. Additional operational guidelines from the Association of Mutual Funds in India are expected by March 31st and is likely to be implemented by 1st April 2025. What is a Specialized Investment Fund? Specialized Investment Fund is a new category of investment product introduced by SEBI to bridge the gap between mutual funds and portfolio management services. This will be suitable for certain type of investors who have higher risk appetite. How are specialized investment funds different from mutual funds and PMS? For mutual funds, the minimum investment can be as low as Rs 500. For PMS, the minimum investment is Rs 50 lakhs. For specialized investment funds, the minimum investment is Rs 10 lakhs. What investment strategies can specialized investment funds offer? SEBI allows specialized investment funds to offer three categories of investment strategies. 1. Equity-oriented strategies, 2. Debt-oriented strategies, and 3. Hybrid strategies. Number 1. Equity-oriented strategies. In that there are three subdivisions. A. Equity long-short funds. In this fund, minimum investment in equity and equity-related instruments will be 80% and the maximum short exposure through derivatives in equity and equity-related instruments will be 25%. That means they can take more than 100% exposure in these kinds of funds. In these kinds of funds, when market is going up, that time the equity instruments will give the benefit, and if it falls also, there will be some benefit because there is a short exposure or there is the derivatives which will benefit from the falling market. B. Equity X Top 100 Long Short Fund. The minimum investment in equity excluding top 100 stocks by market capitalization will be 65% and maximum short exposure through unhedged derivatives position in equity and equity related instruments of other than large cap stocks will be 25%. So other than large cap stocks, lot of money will be invested, so it is suitable for certain types of investors. C. Sector rotation funds. In this, minimum investment in equity will be maximum of 4 sectors will be 80% and other positions will be 25% in derivatives. 2. Debt oriented strategies. There are two types, debt long short fund and sectoral debt long short fund. In this, depending on the maturity of the bonds they are investing in, they have different categories to invest. 3. Hybrid strategies. In this hybrid strategy, they can invest in equity, debt, real estate investment trusts, commodities, etc. And they have some particular rules in terms of the percentage of investment. To prevent excessive funds being introduced, SEBI has restricted AMCs to one investment strategy per category. So one category, only one fund will be there, so they cannot have same category multiple funds. The objective of long short fund is that investors can benefit not only from an uptrend but also downtrend. Currently in mutual funds, you can benefit only when there is an uptrend in the stock markets or instruments which are invested in. What is the minimum investment threshold? Minimum investment 10 lakhs per investor across all investment strategies, and even if there is a redemption, it should not fall below 10 lakhs. If it falls below 10 lakhs, then the entire amount will be refunded to the investor. Even if the value of the fund falls below 10 lakhs, that is fine, but 10 lakhs has to be the investment or the cost of the investment. Which companies can start specialized investment fund? Route number 1. If AMC has been operational for at least 3 years, it must have average assets under management of rupees 10,000 crores or more over the last 3 years. This is one category. Route number 2. AMC must appoint a chief investment officer with at least 10 years of experience managing an AUM of rupees 5,000 crores or more. In such a case also, a specialized investment fund can be started. So in due time, most of the large asset management companies who are running mutual funds currently will also separately offer the specialized investment fund product. How do investors subscribe to and redeem their specialized investment fund investments? Specialized investment funds will be very flexible. They can be invested on a daily, weekly or monthly basis, and redemptions also can be done similar to mutual funds. But maybe the redemptions will not be as fast as mutual funds. Most probably there needs to be a notice period of 15 working days before the redemption can be received to the investor. SEBI may also allow for close-ended and interval investment strategies. SEBI mandates that all such specialized investment funds be listed on the recognized stock exchange to provide an additional liquidity option for investors. Just like exchange traded funds are listed on the stock exchange, this will also be listed. Who is it suitable for? Mutual funds are suitable for all kinds of investors, small or large. Portfolio management services are suitable for HNIs only. And specialized investment funds will be suitable for investors who have a slightly better investment capacity and risk appetite. Investors who invest in specialized investment funds must be financially literate and must understand the risks associated with derivatives being included in the portfolio. Once the final guidelines are announced by SEBI, there will be some more clarity, and once fund houses introduce such products after some months, then investors can compare them to mutual funds and what could be the potential returns to investors. As of now, we will not know how they will perform. After some time, once they are launched and the performance is seen, investors can then get an idea whether they are going to invest or whether it is suitable for their risk appetite. If you like this video, please click the like button and mention in the comment section, when specialized investment funds are launched in India, would you consider investing? If yes, type yes in the comment section, otherwise type no. Thank you for watching this video. Bye bye and all the best.